Hello, welcome back to Closing Bell on a Friday. The market is still on a sell-off and there's loads of confusion that's happening and people are failing to understand why is the market not recovering, not rebounding? Why are we still standing at a standstill but on a declining trend? So I've got a couple of points which I like to share with you to explain just to keep you at ease with real information or data that we have today and nearing end of March. So first, it starts off with the interest rates. Despite the fact that the Fed said the interest rate would be at its low, they're not going to raise it, but end of the day, it's all about real data. So the interest rates is one that's really concerned. Interest rates that's driven by the inflation. Okay, so the inflation is sitting about 1.75 just now. Before COVID-19, inflation was about 2.5%. When inflation is at 2.5%, the interest rates was also at its higher than where we are today. So if the treasury yield keeps pushing all the way up to 2.5, 3%, 3.5%, that will be a quick concern because that will also push the inflation up. When the inflation rate goes up, Feds will have no choice at all but to increase interest rates. And to do so, it's when. It's all about the rate of rise of this inflation, treasury yield, and also eventually the interest rates. So the faster it goes up, the faster the Feds have to make a decision, despite the fact that he says he's not going to raise till the end of year 2022 because it's all based on data. That's why fund managers are still concerned. Fund managers are still worried. They're all basing on data, not somebody else's words before it goes up. It's all about the rate of rise of the inflation, treasury yield, and also potentially rate of rise of the interest rates coming sooner than expected. Okay, the second key point I want to explain to you that's causing concern is about the reflation trade. Okay, the reflation trade is meaning that the global goes back into growth, inflation is back 2 to 3%, and then when inflation is back, everything's coming back. What do? You again raise the interest rates. So people are thinking that we are in an opening trade. Opening trade meaning we've got stimulus checks, we've got unemployment that we need to get down, keep the interest rates low, and when the gates open up, COVID-19 recovers, everything is fine. But no, that's not happening. The traders, investors are not believing it anymore because that's past. The stimulus check is coming, it's not doing anything. It's not dampening the market because everybody's focusing on the reflation trade. Everybody's asking question, are we already on the reflation? Are we already paying ahead of time? That's why we're getting this correction just now. So people are thinking that we're going to get a rebound, thinking we're going to get an opening trade, but no, that's not happening. It looks like we are already transitioning into reflation as we stand just now, but things may change. So it's all about the data. It's all what we want to see. And the last thing I want to speak about is the correction. Okay, it's obvious that between the end of February and up to March, at least the 4 to 6 weeks, we've all been on a sell-off. So we've got a healthy correction of around about 15%. So this healthy correction is in fact called a mini correction. In fact, people are asking the question, should we be getting a deeper correction? That's why investors, sideline money are not coming back in to be pumped into the market to go for growth again. People are taking a step back thinking, wait a minute, is this 15% where we were a couple of weeks ago enough? Are we going to drive back deeper to potentially 25%? Imagine where you stand now, another 10% drop, 25%. Is that going to happen? 25 or perhaps 35%? Nobody knows. The deeper correction could be to another 25, 35, and then next territory is going to be a crash, but which is less likely. But a 10% drop from where we are now, imagine your portfolio drop Nasdaq 10%, multiply by the factor of your Tesla, of your Square, of your Roku. It's going to look really, really painful. So that's why people are not taking that risk, because now the downside risk looks deeper than the upside reward. So that's where we are. I hope you understand my explanation about the rate of rise of interest rate, the reflation trade instead of opening trade, and finally correction. Are we done or are we deeper to go? But end of the day, everybody is still speculating, everybody is still analyzing based on data. Who knows, tomorrow we might get a rebound, but don't expect a huge V-shaped rebound. It's going to be a straight recovery based again on data, on employment data. It's going to be based on the yields, it's going to be based on inflation, it's going to be based on earnings quarter. So where we are now is going to just go up and down, very small minor correction until we get real data. So I hope every investors are patient investor. You guys, me, we should be investing not on the price action we see. We should be investing on the business value for the future value. For example, Tesla, we're investing Tesla in 2025. ARK Invest is about 4,000. I'm betting on AMD going to $400 per share, 4 times where we are today. So we're focusing on the business value, not the price action. So I hope this video keeps everyone filled with information you have to understand the situation, things that you and me cannot control. The only thing we can control is our emotion and the control whether we buy, sell, or don't do anything. So I hope you find this useful. Have a good weekend. Hope to see more videos over the weekend and share with you guys. If not, you guys rest well, spend good time with family. Take care and see you soon.
I hope you enjoyed that video.
Please like this video.
And subscribe to the channel.
Please press the bell button. Ding dong.
Finally, watch the recent video up here.